You might have seen this phrase 1,000 times, but when you look at the actual statistics, it may still be pretty random, right? I've gathered the performance of Bitcoin and the Magnificent 7 stocks in May for the past 10 years to share with you. And of course, this video doesn't end with these numbers. If we look at these figures through the Wyckoff lens, we can fully explain the rise and fall in May, or actually any month in a year. Wouldn't that be amazing? So, let's take a quick look at the May performances of our 8 subjects and see what it looks like. Over the past 10 years, since 2015, the most biased among them have 8 times rise in price and only 2 times that they ended lower. And the worst performing still has 4 times of rise versus 6 times of fall in price. Who are they and how they rank on the chart? Here it is. Tesla is the worst among all. If we take a look at this quickly, with Bitcoin following immediately after with a 50-50% chance of rise or fall in price. So that's the second last position is for Bitcoin. Then tied at 60-40 chance are Amazon, Meta, and Microsoft. Here they are. One up is Apple with 7 times of rise and 3 times of fall. Finally tied at the top are Alphabet or Google as you know it, and Nvidia with an 80-20% chance. And among these 8, the best performing may show 86.8% rise over here, and the worst performing showed 35.4% drop. And guess which one is that? Yeah, unsurprisingly, that's Bitcoin, right over here. But that's not the end of the story. According to my research, there are actually other ones among the remaining 7 that outperformed Bitcoin in other months. That's for another video. If you're interested to see a video about that, drop a comment and let me know. So back to the sell in May topic. I mentioned in the beginning of this video that if we look at these random chances from 80-20 all the way to 40-60, like in this table, through the Wyckoff lens, we can tell actually how that May is likely to perform. It's time to look at them one by one. First, let's start with Alphabet. So we have the weekly chart of Alphabet on the left hand side, and on the right hand side we have our tables. So given the time we have, I'll just focus on the most recent 5 years. So let's start with 2020 and then go all the way to 2024. So I have prepared another table. It's easier for your reference. So basically, for Alphabet in 2020, let's look at that particular month. So it started to rise from this very low point, or the lowest point almost across those years since 2018. So that's looks like an LPS to me in May. So the price basically rose all the way to this point with a little bit of horizontal action before it launched fully to the buying climax in 2021. So that's the first point. The second point is May 2021. So here it is. So that particular month is somewhere between PSY and the buying climax. So we all assume that would be like a rising trend between these two stages, right? So combining the LPS and the PSY to buying climax period, we can see basically those 2 months are both positive. Obviously, it depends on the market fluctuation during the PSY to buying climax, so it doesn't always go very crazy even at that stage. So interestingly, during May, it was the time when the price was having a plateau at that particular year. So that's why the rise was only like 0.06%. So going all the way into 2022, that's the May period. It's a time after second LPSY. So post LPSY, we understand there would be periods of falling prices as well as rebound forming another lower LPSY. So during that May, the expectation would be a price drop, but again, interestingly, over that period, since it was some horizontal action that's forming another LPSY, that's why it's got 0.8% rise at that period. And continuing to 2023 May, we see that that period is actually after the sign of strength as well as the last point of support. So after that, I understand there may be some horizontal movement, but also that period is actually the period immediately before the surge to a PSY and eventually the buying climax. So unsurprisingly, there was a 14% rise during that time in 2022. So let me move the screen a little so we can see 2024 as well. So going into 2024, that's last year, during May, it was the time, like I mentioned earlier, somewhere between PSY and BC, the buying climax. So at that time, the expectation would be like an upward trend with intermittent ups and downs, but not too crazy. So over here we can see during May there was like mild rise with like the long candlesticks in the middle. So 5.66% rise. That's that period. So for Alphabet, it kind of proved or aligned with the Wyckoff pattern in terms of whether to buy or sell in May. So instead of blindly following that tagline, you would probably don't want to sell for some years, especially if it's after LPSY and during PSY to blind climax, right? It's only the post LPSY that you would consider that's probably not a good time to get into the market. So that's one down. Let's get rid of it. And then next is Amazon. So that's okay. So Amazon 2020. That's right here. Again, it's the LPSY time before the PSY, and also 2021. That's during the PSY period. So both again post LPS would be like positive in terms of expectation, and in terms of PSY we know there would be fluctuation, so not too crazy rise and fall, 8% and minus 5% during those two periods. And then for 2021 May, we can see over here it's some horizontal movements. That's basically after the second test period. So the expectation of the second test would be some kind of falling to a point where we see sign of weakness, and then there may be rebound, and in that year there was an upthrust. So that May over there was a sign of weakness period. So it's a higher sign of weakness than the original one in March. That's I would probably not consider that sign of weakness. That's why I didn't put a tag here. So it's you can say a little bit of consolidation before the upthrust. And then in 2023, sorry, I mixed up. So that's for the PSY, and then 2022 May is actually during this time. That's the right sign of weakness. So it's basically a sharp fall after the LPSY. So that's 2022, and 2023 is actually over here. That's right after the SOS, and then climbing all the way to PSY. So that's why a positive value is expected, and it rose 4.46% during that May. And finally, 2024. 2024 May, it was the time where the buying climax, or close to the buying climax during the current cycle. So in that May last year, it was 12.87% rise. So let me move the screen a little bit so you can see. So that's 12.87% from PSY to BC. And again, Apple still matches when we put on the Wyckoff lenses, right? And next, sorry, that's not Apple, that's Amazon. Skip one. Yeah, that's 14.35%, and then the buying climax, it's kind of flat at minus 0.8%. So we understand during buying climax, we're expecting the buying power is dying down. So that's why we see a rather flat figure over here. But post SOS, it was 14.35% rise, and during the sign of weakness is minus 3%. Post distribution second test, it was minus 7. PSY to BC obviously should be positive. So for Amazon, they align. And then next is Apple. So let's bring up Apple. So going to 2020, right here, that's May. Once again, is very similar across all the Magnificent Seven, that they all had a dip during March 2020. It's understandable, it was COVID period, and like basically it's just started around the world. So that's the very bottom, and then immediately there was a bounce and triggered the PSY period. So that's the first one, the LPS, 8.22% from the low point to the PSY. And then during 2021 May, it was still around this whole PSY period where it dropped by 5%. So basically during PSY there may be some ups and downs, and that particular May sits right at the time when there was like a little bit of retreat before the final stretch towards the buying climax. And then in 2022 May, it was the time where we have the sign of weakness, similar to what we have just seen for Amazon. And for 2023, here's the period. So again, it's after SOS and the backup and last point of support, and we see a positive 4.46% running to this PSY period. And finally, 2004. That's the time, similar to Apple again, somewhere between the PSY period and the buying climax. So right over here, that's why it was a positive 12.87%. Again, the third one, Apple, matches. And now you may ask, how about Meta, Microsoft, and Nvidia? Let's take a quick look. For Meta, again 2020, a dip I mentioned during March, COVID period, and then that May already rebounded to basically the level before the dip, and that's the LPS period I tagged, and that was a 9.96% rise. And then immediately follows in 2021 was between PSY and BC. Again, positive values expected. And during 2022, May, that was a period during an accumulation cycle right after automatic rally. So after the automatic rally, it's expected that the price will fall again. So that's when that May, where that May sits, and it was minus 3.41, not too crazy. And during 2023, that May, similar to the other Magnificent Sevens, there was an SOS immediately before, and then a backup and last point of support. Then we see the rise towards the PSY. So that's another 10.15, also double digit, similar to the other three that we have already seen. And finally, for 2024, that's the time after an automatic reaction, and we know during the distribution cycle, after automatic reaction, there will be likely a second test. Not always, but usually. So that's the time when it had an 8.52% rise. Again, bingo, right? So 4 out of 4, we can find a matching phenomenon with Wyckoff. So it's not as random as looking at statistics solely anymore. With the Wyckoff lens, we can tell exactly whether sell in May is true or not. Even the same for Microsoft, Nvidia, and Tesla. So I don't want to go through them one by one. Just quickly show you they are basically the same pattern over the course of that 5 years. So all of them started with an LPS during or right after the dip in COVID. Nvidia actually rose over 20% that May, and then immediately follows because there is like a time difference. So Tesla will still pose a sign of strength. That's when it drops from the sign of strength. That's why there was a almost minus 12% drop during that May. However, for the other two, it's the PSY period, so it's mildly up or like slightly down, because PSY tends to have a period of horizontal action like this. And then eventually 2022 mostly pose last point of supply, or this is pose preliminary support. So their cycles goes a little bit different in terms of timing. So that, however, during these periods, you see from PS to selling climax, that's almost minus 13%. It matches the cycle. And then 2023 LPS, we have seen from the previous 4 Magnificent 7. It's a period that we expect some rise, and then obviously sign of strength, 36% rise, and other LPS 24% rise. So these are the periods where the cycle changes from the accumulation to distribution. So it all depends on when that happens, which particular month that happens. For these, we can see sometimes it happens in April, sometimes in May, sometimes in June, but it doesn't matter as long as it's within the Wyckoff cycle. It will still appear that way. And eventually last year, that's post automatic reaction. That's after the buying climax, and then this AR that's this tag is about. So post automatic reaction, there will be a little bit of rebound, and then a second test. That's why 6.63% rise. PSY to BC, Nvidia was a little bit slower, and it rose almost 27% last year during May. And LPS, once again, mild fall, that's understandable. So for all the Magnificent Seven, we have seen that they match their rise and falls match with the Wyckoff stages. And finally, how about Bitcoin? So Bitcoin, we can take a quick look right over here. So Bitcoin 2020, it was right after a distribution cycle and also the same COVID dip, and then it started to climb to the original level during May. So that's why during 2020 May it was a 9.52% rise. And during 2021 May time, it was the time after the buying climax. So let me extend this a little so it's easier for you to see. That's May. So it's somewhere between the right after the automatic reaction actually, and then May 3rd was actually a second test, and immediately it dropped to form a sign of weakness during the entire May. So this was actually post second test, and it showed the minus 35.44% drop that we showed earlier in this video about like the best performance May and also the worst performance May for Bitcoin. That's actually 2021 for worst performance. And then for 2022, it was the post PS period, that's the preliminary support to the selling climax. So during May, it was in the middle of that transition. So that's why there was minus 15.6% drop. And then for 2023, that's during the backup period after the sign of strength. So that's a mild drop of roughly 7%. And finally last year during May time, that's post automatic reaction once again. So after automatic reaction, we expect there would be a rise to a second test, and that was an 11.26% rise. So up to this point, that basically sums up the findings matches the Wyckoff cycle. The May performance basically is still within how Wyckoff method defines the rise and falls during different stages or between the stages. So there you have it, the magic lens that Wyckoff methods offer. Let me know in the comment what you think. See you in my next video.